All right, let's talk about our dealer penalties and interest. Under the current statute, the way it is written today, a dealer has 10 days to get you the title ad valorem tax and the title application. Is there anybody in this room that's ever had a dealer walk into their office within 10 days of the date of a sale and bring you all that information? I want you to stand up and be proud if they have. I haven't seen anybody yet. It just typically doesn't happen, and there are a lot of reasons for it. They can't get a lien release on the other car, the trade-in. They can't get the lien perfected on the new car. There's all kinds of reasons. It would probably only happen if I walked into the dealership with either a check in my hand to pay cash for a new car that was a bank certified fund, so they would accept it and not wait 10 days for the check to clear, or if I walked in and I had my title in my hand for the car I have and was paying cash for the one I was buying. That ain't gonna happen to me. So in most cases, meeting this 10-day deadline is something dealers have basically said we can't do. However, the way that bill is written today, if they don't file that with you within 10 days of a date of purchase, they owe a 5% penalty. So back to our example this morning of that $1,300 title tax due, on day 11 they owe $1,365. If it's not paid within another 30 days, they owe another 5%. So now they owe $1,400 and whatever the number is, my head's not working today. $30, I think $1,430. They are also subject to the 30-day penalty, which is 10% plus 1% interest. You think they're happy? So here's one laid on top of the other one. A 5% penalty at a day 11. On day 31, we're going to put the 10% penalty on it. Day 41, there's another 5% penalty, and it just keeps going on out. I suspect we're going to see this change. I suspect it will maybe change before March 1st.
And Gratis will do this for us?
Gratis will do this for you. Fortunately, if they take away the 10-day penalty and just say we're going to take the 10-day penalty away, that's a quick change for us in Gratis, because instead of saying at 10 days we're going to add 5%, we're going to say at 10 days we're going to add 0%. That's a quick change for us. However, if you look at House Bill 80, these changes have been done to go to the 30-day and after that, but they're a flat dollar amount, not a percentage. It's a little bit more difficult from the programming side just because that's not how we programmed it. So that would take us a minute or two longer to react to. Now, I don't know, some of the changes in House Bill 80 are slated with an effective date of July the 1st, but I'm not sure they all are. So I'm not sure about this one because I just haven't sat down and tried to digest all that yet. But this is the way it exists today. This is how Gratis is programmed to start March 1st. Needless to say, they're not particularly thrilled. Now, that same 30-day penalty, though, exists on your casual sales. So if that bill of sale is March 1st, and dude doesn't come in until March 31st, he's going to owe 10%, right? Again, we're already not happy, and now you're going to hit me with another 10%, only because I didn't know. And of course, their interest just keeps going out. And you're going to have some of those folks who don't come in, and you're going to be hitting them with that 10% penalty plus 1% interest per month.
Is there still going to be
That if there's a penalty there now, yes. And if there's if you think they fraudulently changed that document in order to avoid paying the tax timely, that's another one of those commissioner penalties we can talk about. Somebody said they'd probably have somebody that when they walked up there and said you're late, they'd probably sit there and mark through it and write a new date. I mean, if they're blatant enough to do that, I'd be blatant enough to probably try to make a case against them. Because here they are. The commissioner penalties for fraudulent transfers and false information. The penalty we've talked about is up to $2,500 state, up to $2,500 local. Falsifying material information on the following. Now, this says falsifying a bill of sale. Had a fellow at one of the meetings who got really unhappy with me because I said we're going to use the book value in gratis, not your bill of sale on a casual sale. You're questioning my integrity. And I said, no, sir, I'm not questioning your integrity. But I might question the integrity of some other folks out there. Then when this slide came up, he said, well, how can you say that it matters that I falsified a bill of sale? You're not going to use that value anyway. And I said, well, now wait, we could, depending on whether it was a used car that didn't appear in the book, right? Or a bill of sale where I might have changed the amount of money I received for my trade-in to therefore lessen the amount of tax I might owe. So there would be some cases where the taxpayer might gain something by falsifying a bill of sale. The other place he might gain something by falsifying a bill of sale would be altering the date, because I have now lessened the penalty I have to pay by making it look like I came in within 30 days of a date of sale. So there are reasons that you would look at that. Falsifying any material information on an affidavit, a family or inheritance transfer. If I claim to be related and I'm not, and you know that, then you could go through this process. Because if I totally opted in, I would have paid the full freight. So you're talking about that transfer after the fact where you paid the reduced amount. Yes, ma'am?
Do you think it would be in our best interest to require notarized bills of sale now?
No. I don't think you want to go there yet. Her question was, do you think it would be in their best interest to require a notarized bill of sale? Unless the statute requires it, you're going to have a hard battle to fight over that one. So, if you have a situation that you feel like falls within something that's been falsified, you're the one that got the documents, you're the one where the transaction happened, you're going to have to be the one to start this process rolling. So the first thing you would have to do would be furnish a copy of those documents to the commissioner. And we're talking revenue commissioner here, so that they could be reviewed at the department. Some written statement about the facts and the allegations you're making against this person. And anything else that you would have. Maybe you have a statement of someone else who came in and said, hey, I know Sam down the street came in here and processed this transaction and said that this person is their daughter and they're not. So that would be that kind of situation. So then the commissioner within 60 days will make the determination and assess the penalty. You again will collect the penalty, so you're going to see this fellow that you've made really unhappy come back in to pay his penalty. Now, do we think this is going to happen? Yeah, I probably think somebody's going to try that. But again, it's going to be up to you to be the ones to be the kind of the police of this and the starting of looking into this. Because we won't know it. You're the ones that are probably going to have the information. There may be some rare occasions that somebody may call the department and blow a whistle. They do that now on sales tax and income tax things. People are always minding somebody else's business for them.